this computer. Okay, hello everyone. It's Manal McClendon, Master Trader, Cryptonology. Wanted to show you guys a really cool indicator, especially for all the new people. If you're traded Forex or you're trading Forex, and if you've been in my academy, you probably know about this indicator already. But it's really a good timing indicator that helps you know when to get in the market. It lets you know who's in the market, if it's buyers in the market or it's sellers in the market. And I use this a lot to help me time my entries, right? And apologize, guys, for being late today. Internet was down, so I had to wait. In our neighborhood, something happened. It's a lot of rain out here in Houston, so it's scattered rain, so something happened. But we're here, so thank you for being patient. Guys, just to recap on what's going on. Last week, we had a lot of news, a lot of trade war news that was coming out with Canada and the United States, Great Britain and the G7 meeting. A lot of things was happening financial news was coming out last week that just had the markets doing all type of things that we didn't anticipate it. And we're going to have those days. That's common in the trading world. There are very few in between, especially when the prices continually to move like it did, and gold shot down. But we were already anticipating gold to get down to the 12.8 area. So that should be the bottom for gold. We caught that sell on gold like weeks ago, and it finally did what we anticipated for it to do. So real quick, I want to show you an indicator. It's called the ADX, average directional movement, right? I like to use this on the 1 hour chart. Let me plug up my computer. I don't want this to go out. Okay, I like to use it on the 1 day chart. So this indicator is really good to let you know who's in the market and when to get into the market and when to get out of the market. So let's add this really quick. We're going to go to indicators. We're going to go down to trend. We're going to find average directional movement index. We click that. And notice we're going to keep the same settings. You want the level 20, level 30, and level 40. If you don't have those levels, you want to add those levels by typing it in and hitting add. But 20 and 40 are very, very important levels. So we're going to click that. Notice when we click that, it looks like a lot of just lines, right? And to the new traders, this looks kind of crazy, right? Like squiggly lines. But to a trained eye, we know this means a lot, right? So I'm going to do this really quick, and I want you guys to be able to go back and watch the videos. But it's real simple, guys. This green line represents the bull, the buyers in the market. The red line represents the sellers in the market. The black line is the volume line. This line, as long as it's above 20, you always trade when it's above 20. That means there's volume in the market. So notice here's 20 over here. And as long as this line is above 20, that means that there's volume in the market, but it doesn't tell us who's in the market. It just tells us there's a lot of people in the market. So when this black line is below 20, as we can see here, that means that price is consolidating and there's nobody in the market. But when it breaks above 20, that means volume is starting to come into the market, whether it's buyers or sellers. So we never trade or place any trade when the black line is below 20. We want it above 20. So that's the first thing. You want it above 20. Now, the second thing is the blue represents the buyers and the red, the sellers. So notice the green represents the buyers and the red, the sellers. So when the green crosses above, you see right here, the green crossed above the red, that means the buyers took over. The black line over 20 tells us there's volume in the market now, but who's in the market? that's when we go to the red and green line. So the green line crossed the red. That lets us know that the buyers are dominating the market now. So we should not be selling if the green has crossed the red. That means the buyers are dominating the market. And notice when that green crossed the red, boom, look at here. We see a sharp move on USD CAD. Now, a lot of people were saying, man, it's keep going up, it's keep going up. That's because the green line is still over the red line. So notice, green line, red line, the bulls or the buyers are taking over. Green line is still above the red line. Green line is still above the red line. So we know we're still going to be on this buying CAD because the green is still above the red. We're not going to close out of this trade, this buy on CAD, until the red crosses back over the green. Really simple. So let's go over here. We see the buyers were dominating, and then the lines got crossed. Then the red crossed the green. Now the sellers are dominating. So look what happened. The price started going down, going down, going down, going down, going down, going down. Then boom, we got a cross. And as soon as once they cross, we take our profits and then we go in the opposite direction. So say here we cross and we were buying, and then we take our profits as soon as the red crosses the green, because that tells us the sellers are about to join the market and take over the market. So this is an awesome indicator, guys. Look here. Over here, we see that the green crossed the red. The buyers are in the market. The buyers, look, price is going up. The black line is above 20. That means volume is starting to come in the market. Now watch this, buyers are buyers, buyers. And then the cross happened and we would have took our profits here because look, the sellers joined the market and watch, push the market up. Sellers, 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 sellers. Here we would have closed out, took our profits. So anytime the red is above the green, you sell. And when the green is above the red, you buy. Really simple. Look at this right here. This is really, right here we see the red cross the green. And look what happened. Black line is above 20. Means we got volume and the market just drops. Red is still over green. And bam, right here, we would have took our profits. Now, I probably would have took my profits way down here. I wouldn't have waited for that green to cross. Because once you get a couple of 20 or 40 pips, and our average is to lock in 20 pips. So that's way more than 20 pips. So if you would have stayed in, this is 1 hour candlesticks, guys. We would have been in the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 5, 26, 27 hours of selling this pair. So you see how important it is to be able to use this as an indicator or directional movement or when to get into a trade on top of the other things you've learned. You know, you want to use this. This will help you out as you trade. So let's go over to Great Britain USD. All right, we're going to go up to insert, go to indicators. We're going to go down to trend, average moving direction, average direction of movement. Click OK. We're going to go to the 1 hour. We're going to zoom in. So let's see here, really quick. The sellers we see crossed right here. That means the sellers took over because they're crossing above the green. Now notice, look what happened with price. It's going down. Really simple, guys. This is so cool. Look, we would have still been in that. And we would actually still been in the sale because that really didn't cross. It just bounced off that line, right? So notice when this green crosses above, we're going to get into Great Britain USD. So this helps prevent fake outs, guys, because look, the sellers were going down, going down, going down. Most people would have jumped in here, but because they seen 3 or 4 candles, green candles, and then the market pulls back against them. But notice down here, the sellers are still dominating. This was just a short retracement. So Great Britain USD probably will pull down a little bit, but because they're at the bottom, we know that this green is about to cross because it's way below 20, it's way down at the bottom. So we know Great Britain is about to turn any day now. But once that green breaks above that red, we're in this buy and we're going to go long on Great Britain. So guys, I hope you utilize this strategy. It will definitely help you in your trading experience. So let me look over here. If you can see, and you go back and you see, look here, the buyers took over. And you want to use this, guys, not just by itself. You want to use it with your W patterns. Like when you see patterns form, M's form, W's form, like here, you know, that's a little W. When you see these little M's form, you want to make sure that you can confirm that with the ADX. But if you just trade the ADX, you will make 20 pips, guys. You'll easily make 20 pips every time this cross. So that's a guaranteed 20 pips every time it crosses. If you drop down to the 15-minute, you can see, you know, the crosses are a lot faster, but you're in and out of trades. Right here, we would have sold. When that dropped, we would have took our profits. Here, we would have bought. Look at that. We would have caught that up, you know, took our profits. So it's a really good indicator to let you know who's dominating the market and when you should get into a buy and get into a sell. So guys, thank you so much for watching this video. It's Friday. Don't want to hold you too long. I'm going to stop the video and stop the recording and then ask any questions that you might have.